The weight of borrowed chains picture, a freshly minted graduate stepping into adulthood, armed with a sleek debit card, a shimmering promise of freedom and instant rewards. That promise, however, soon reveals its true form. A cumbersome anchor, tethered to the ankles, pulling dreams of financial peace beneath the waves. Borrowing isn't a thread woven naturally into life's tapestry. It's a towering dam, holding back the flow of prosperity and autonomy. In the United States alone, the collective load of loans looms like a storm cloud, billions stacked high, casting shadows over households. This weight narrows horizons, piling stress onto daily existence and strangling the ability to live guided by values rather than necessity. The evidence is everywhere. Families tethered to repayment plans miss out on vacations or sabbaticals. Individuals juggle multiple jobs just to keep the tide at bay. Yet, there's a way to break free. Start by targeting the heaviest chains, those loans with the steepest interest rates that grow like unchecked ivy. Avoid the siren call of debt, management firms or emotional crutches promising quick relief. These often tighten the knots instead of loosening them. Speed is crucial. Delaying repayment lets the burden fester. But the real shift comes deeper. It's about rewiring the mind's compass, steering away from a culture of buy now, pay later, toward one of deliberate, grounded choices. Imagine money not as a fleeting gust, but as a riverbed carved over time. Steady, intentional, enduring. The mirage of worthy. Loan society often dangles the idea of smart borrowing, like a carrot on a stick. Loans for a business venture, a home, or a degree framed as noble stepping stones. But this polished label can be a mirage, luring the unwary into quicksand. Take a home loan. It's sold as the bedrock of stability, a rite of passage. Yet reaching for a mansion beyond means doesn't build a foundation. It constructs a prison of upkeep costs, property taxes, and endless maintenance. A modest dwelling, by contrast, offers shelter without shackles. Then there's the education loan, a supposed ladder to success. For many, it's less a lift and more a millstone. Young graduates stagger under its heft for decades, their ambitions clipped by monthly dues. Consider a different lens. A small business loan might spark a thriving enterprise, but only if the venture's roots are strong. Otherwise, it's a gamble dressed as strategy. These so-called worthy loans aren't golden tickets. They're often wolves in sheep's clothing, promising freedom while tightening the leash. The counterpoint isn't to shun all borrowing, but to see it for what it is. A tool, not a savior. True financial liberty grows from soil enriched by thrift, patience, and sustainable habits, not from leaning on borrowed crutches. Wealth isn't a towering skyscraper built overnight. It's an orchard, cultivated season by season, yielding fruit for years to come. Planting seeds for tomorrow's harvest beyond shedding borrowed burdens, the journey turns to sowing wealth through wise investing. Markets are like oceans, sometimes calm, often stormy, always unpredictable. The temptation is to chase the waves, betting on quick swells. But real growth lies in planting seeds for a distant harvest, not scrambling for instant blooms. This means embracing investing as a marathon, not a sprint, letting time and consistency work their quiet alchemy. A dollar tucked away today, growing at a modest rate, can tower like an oak in 20 years, its branches heavy with compounded returns. Lifelong learning is the sunlight here. Understanding money's rhythms, how it flows, where it pools, what's lost when one path is chosen over another, sharpens every decision. Take opportunity costs. Spending on a fleeting luxury might mean forgoing a stake in a fund that doubles over a decade. History offers lessons too. Think of the tech boom of the late 90s or the housing crash of 2008. Those who started early, stayed steady, and ignored the hype often emerged with fuller barns. Contrast that with the latecomers, swept up in frenzies, left clutching wilted gains. The mechanics matter. Diversify like a farmer planting multiple crops, hedge against drought with bonds or stable stocks, and let compounding, the snowball, rolling downhill, build momentum. But the heart of it transcends numbers. Financial independence isn't a finish line marked by a bloated bank account. It's a mindset. It's choosing to live beneath means, to prioritize roots over flash, to see wealth as a tool for freedom, not a trophy. Every seed planted today shapes tomorrow's landscape, and the earlier the sowing begins, the richer the yield. Peeling back the layers. Key insight: reframing borrowing's role. Deeper. Look. Debt often wears the mask of a relentless foe, a shadow that darkens every doorstep, an unshakable load. This framing carries weight. Unchecked borrowing can indeed swamp lives like a flood. Yet, the picture isn't so monochrome. Not every loan is a shackle waiting to tighten. Education funding, for instance, can be a bridge, lifting someone from a modest start to a career that pays dividends for decades. A carpenter borrowing to buy tools might triple earnings, turning debt into a lever rather than a weight. Voices from the economic chorus, like analyses in the Wall Street Journal, or research from the World Bank, nudge this further. Strategic borrowing, they argue, can fuel growth in vibrant economies, amplifying opportunities where cash alone falls short. A small business owner leveraging a loan to seize a market gap might outpace a cautious rival. Even mortgages, when scaled to need rather than greed, can anchor a family without drowning them. The catch? Context is king. Personal goals, risk appetite, and economic wins all shift the equation. Blanketing all debt as a villain risks sanding down a jagged truth. The unacceptable burden lens holds power. It wakes people to borrowing's traps, but it sidesteps nuance. A young entrepreneur might thrive with a calculated loan, while another drowns in reckless credit. Financial paths aren't one size fits all. Their trails blaze through individual terrain. This view could stretch wider, probing how timing, scale, and intent tip the scales. Debt's not inherently a curse nor a cure. It's a mirror, reflecting the choices behind it.